Well, hello, everybody. Good morning. It's Monday, and the markets are looking strong. Bitcoin is just shy of 108,000 as we speak, and we'll dig into a whole bunch of interesting concepts today, including wealth transfers, more manipulations, what's hot, what's not, some funky stuff happening in more of the convergence theme between crypto and the rest of the world, socials, etc. We'll talk about treasuries and a ton more. But before we do, let's jump in and check in on the team. The whole band is back together today. Woohoo. Hey, Mando. Doing good?
Hey, guys. Great. How are you?
Alive and kicking. Got the hair gel working. Everything's working right there. CTO.
I'm doing fantastic. I think it could be go time here, guys. I mean, it's looking very strong and exciting here.
Okay, you got your seatbelt on, ready to go. Moon boots.
Yeah.
Okay, Marty, what's going on with your world?
Hey guys, nice to see you back. I've been traveling. I'm back home. It's nice to join you guys again. I've missed you. Yeah, I think it's CT. I think Wyckoff is ready to mark up. I think it's any moment now. We called June 7th was the date we called back in April, and it's June 9th today. I think we're nearly there. Nice to see you guys. Excited for the show.
Great. But get some housekeeping out of the way. Links are below if you're watching on my channel to all these fine gentlemen. Mando's great newsletter, of course, his Twitter handle, Marty, Twitter extraordinaire 24/7, and CTO YouTube channel, X, etc. It's all there. But let's talk a little bit about what we're going to talk about. This is a risk on revival. All of a sudden, we went through burning hellscape where people thought the world was going to end to a huge pivot in the space of 6 weeks to everybody going risk on. What is going on? We'll dig into that. We have a long agenda. We won't waste too much time on that. But first, we are going to talk about this topic. About 2 years ago, I made a very detailed video about wealth transfer, and I'm glad Marty's picking up on what's happening next. Marty, this is big for many reasons, as a lot of people, median age, say 36 to 40, that could be on the cusp of inheriting a lot of money because of the big skew of wealth and how it is held by the older generations. Walk us through this and what it could mean for Bitcoin.
Yeah, this was sort of a thesis that sort of was in development in my community, just with the guys. We started to analyze exactly. First of all, everyone talks about a wealth transfer, so we started to just analyze it, sort of do the math. Okay, why is Bitcoin moving up? Where is the money? You know the old adage, follow the money. And so, I just used Grok. I just used AI and worked out exactly who's going to inherit money and who's starting to inherit money. So it starts at entropy, right? Everyone dies. There's nothing you can do about that. And it turns out that if you look at the average age of American men and women, and you look at the average median age of boomers or older men and women, you'll see that 50 to 60% of the top 1% of wealthiest Americans are over the age of 65. And then if you look at mortality and when people start to die, you'll see that they're starting to die. Those percentages are starting to die now. Now, what happens when people die is that their children inherit their liquidity, their assets, their businesses, their portfolios, their dividends, their social, everything. And it's all about what will people do when they inherit the money. Now, remember, this starts now and it goes for 15 years. We're in the beginning of it. And then we looked at who buys Bitcoin, what is the age group of, the majority of Bitcoin owners. And it turns out they're exactly 40 years old, 40.1 years old. So you can see we're in that sweet spot where people that are number one Bitcoin bulls are inheriting money from their dying parents. And so they're converting the wealth of, the old portfolio. And let's look at the old portfolio. If anyone like me, let's just say 40 to 60, you'll know that over the last 40 years, 50 years, Raymond James, Charles Schwab, any financial planner put your father and your father's father into a 60-40 portfolio, right? The good old 60-40 portfolio, stocks and bonds. Well, we all know the situation with bonds. Bonds are selling off. So we're in the situation where we've got these large portfolios being inherited by people that are bullish on Bitcoin, consisting of a large majority of stocks and bonds, and they are converting them, selling them, and moving them into Bitcoin. So I think this is it's a train that has just left the station. And when you do the math, it is unquestionably happening. This is your reason for the Bitcoin bull run right here.
Yeah, let's go to Mando for a second. Mando, do you buy into this? And two questions for you, and then I got a really good question for CTO. Are millennials and Gen X buying Bitcoin fast enough to counter the wealth inertia of boomers? Or are they already too late to the game, or is it just a treasury game, which we'll get into? Or could Bitcoin become the digital inheritance of this generation, or will they buy meme coins or AI stocks?
I think Bitcoin is going to become an increasingly popular form of like asset planning or estate planning, let's say, particularly for like the boomer class. It seems like a very easy way to transfer wealth over multi-generations. So I do think that you're going to see every single asset class look at Bitcoin initially. Some people will look at it for the upside potential versus current assets like, let's say, real estate. But for boomers as well, I think it will be an intergenerational trade. Like people will actually look to buy it as a form of estate planning. So, yeah, I kind of feel like this makes sense to me. This makes sense to me. I think we're going to see every single age bracket have a reason to own Bitcoin. We're seeing it right now. Like there's no age bracket selling Bitcoin, right? Like it's just there's always a need for it. This makes sense.
I like that. Very positive. Thank you, Mando. CTO, one for you. Can Bitcoin serve as the great equalizer in a world where AI threatens middle-class livelihoods? So here we are bringing AI and Bitcoin together again, like we did last week. What do you think? Can it save them?
Will it equalize? I'm not so sure it will equalize in that sense. I think that, unfortunately, I think differences are going to increase. There's a small minority of the population who sit here every week, watch us four here rambling about Bitcoin, trying to learn, trying to figure it out, and so on and so forth. I think most people won't. And unfortunately, I think it's the same people who might get replaced in their jobs. So I think it could lead to increased differences. Like some people are in the front lines here, and it's probably the same people who are in front line trying to make use of AI instead of seeing it as a threat, for example. So it's very interesting. I think what is certain is that there's huge changes coming, and Bitcoin is one of the biggest.
Yeah. Very interesting. So let's see. And of course, Marty, we don't wish any ill will on anybody who's old, and hopefully people are staying healthy. I always warn people to stay healthy, enjoy your bags, the fruits of your labor, and people are living longer, not necessarily in certain countries, but in others, they definitely are. In fact, anyway, we'll move on from there. Let's talk about treasuries. This is big. Marty, you did have a post. You said that 3.2% of all Bitcoin is held by, I can't remember, 61 companies or something. Well, I've got an updated slide for you. It's actually, 100 firms now own 819,000 Bitcoin, 5.5% of the Bitcoin supply. Now, what I assume 5.5% is there's never going to be more than 15 million Bitcoin because so many are lost, etc., locked away. So that is monstrous. But what's even more monstrous is the rate of change. If you rewind the clock 12 months, this was about 360,000 Bitcoin. So it's more than doubled in a year, which is extraordinary. And of course, we have the elephant in the room, 582,000 Bitcoin now held by Strategy. They bought again this week by issuing just preferred stock, not hitting the ATM, which is also very good. But how sustainable is all this treasury stuff? And, there is a theory, I believe, that if we do get a bear market, a lot of these treasuries will be forced to sell, which could cause cascading price drops. I'll give that to you first, Mando. What do you think? Is that a danger, or will the treasuries just keep on keeping us out of a bear market for the next 8 years?
The reason why this is attractive is because they trade at a premium to their current holdings. I do think that's a bit of a bubble. I don't think that's going to continue forever, particularly when you see this sort of narrative of, oh, this is a quick way for everyone to make money, let's all do it. Those sort of things don't last forever, generally. So I think the Bitcoin treasury stuff will probably ebb and flow. You can paint a pretty bearish picture in that they'd have to sell. You could have situations where they merge, which I think would be fairly common as well. We might see, let's say if MicroStrategy keeps its premium, it might end up buying a lot of these. If any of them start trading at a discount to their assets, then they could start buying them. But I wouldn't necessarily think this is all good. There will be a point in time where this story sours. There's no doubt in my mind about it. It's just a question of how much it sours.
Very well said. Very well said. Now, the point is one player has enough gunpowder to buy up the entire supply and has been doing that, this MicroStrategy. But you're right. We're already seeing cracks in the system. There was some treasury company called Kids that blew up last week. We have another one. Semler is trading at a 20% discount to their bags, which is kind of startling. So it's already creeping in there. Now, if you look...
MicroStrategy could come in and just buy them then.
Yeah.
They could issue stock and buy Semler. So like that is the next stage of this potentially. Like the better run ones or the ones with the better narratives buy the ones that start trading at discount, and then you can create even more value.
Yeah, and I had another theory too, and anybody chime in if you believe in this. Like Marathon was trading at a 6% premium to their Bitcoin bag, but they have so much IP, so much real estate, so many miners, you name it, and they're mining 780 Bitcoin a month. That would be a strategic asset to buy if they can get it close to the value of their Bitcoin holdings and get all the rest as gravy. That could be a strategic decision. CTO, what do you think of that? Buying a miner or the consolidation theory from Mando?
Yeah, I agree with what Mando said. I think that if the bear market starts, it could start, cause some cascading. I don't think we will have seen the last of the ups and downs. I think that trend will continue, and I think it's an opportunity. So I'm looking forward to that. But I think what's interesting, one thing that I've thought a lot about is that I see more and more people start worrying about the banks, the stability of the banks around the world. Because what happened in the 2008 crisis was that they speculated badly on loans and bonds. And now we kind of see the same situation again. The banks have issued a lot of loans, not so much mortgages this time, but more loans to companies. Yields are going up. So many of those loan takers can't pay their loans anymore. They might default. We have bonds starting getting in question again and so on. So a lot of companies, I've heard this now from quite many, a lot of companies are starting to worry. Where should we, park the money if the banks start feeling shaky again? And the answer is not so clear. Before it was bonds, like US government bonds. If you want to park money safely, you buy US government bonds. Now maybe they are shaky also. Could they default? Could they start defaulting? Not maybe on American takers, but maybe on foreign takers or something. I think it could be possible. And then a lot of companies are actually starting to look at Bitcoin as a safer alternative to having money in the banks. Can you guys imagine? We always were like the risky alternative, and the banks were the safe alternative, and they always highlighted the risks of Bitcoin. Now Bitcoin is slowly becoming like the safe alternative to having money in the bank account. And I've seen this now from quite many sources. I think this list that we're looking at here, which is now only bought on speculation, mostly bought on speculation. They want to buy Bitcoin to increase the valuation because they get an instant spike in stock value. But I think we could start getting companies here who are buying Bitcoin for defensive purposes.
Correct.
Yeah.
Because they worry about having the company treasury in the bank that could, go south.
Yeah.
What do you guys think of that?
Yeah, definitely. People like, I worry a lot about Warren Buffett's, $350 billion in cash just melting away. And I believe in that. And also there's another theory too, and that is this whole thing is creating a new bond market, a new credit market. 320 trillion is basically unfungible. It needs a different solution. And Michael Saylor, so far, this is crazy, this statistic, he has raised 14 billion in new capital year to date. And much of it was from selling these preferreds, Stride, Strife, and STRK. It is bonkers. So yeah, the traditional debt market is toast. People are looking for a solution, and Michael Saylor's right there. And he is oversubscribing this stuff at a rate of knots. That is quite startling. 14 billion. I mean, that's 14 times the market cap of that company back in August 2020. This is mind-blowing. Marty, what do you think of this vacuum sucking up
guys,
all the cash?
It's nothing new. This was the thesis from the beginning. We've been speaking about this since early this year. The move is debt into hard money, and that's gold and Bitcoin. And Michael Saylor is doing it one way, the genius way, which begs the question. And also, I track Bitcoin holders, and Strategy is by far the biggest holder of Bitcoin. By far, of actually a holder of Bitcoin, not a custodian or an exchange. Which begs the question: is it a proxy for the government? Is it a proxy for the next financial system? What is the strategy? It's becoming so overwhelmingly big, so much cheap money and debt moving into Bitcoin. It's almost beginning to turn hat a little bit in a good way. I think that this is the Mar-a-Lago Accord. This is the new great reset. Old debt has become untrusted. Moody's is downgraded US debt. Global debt is at its all-time high. I think the move is debt into hard assets. We've seen that with gold. And I think these treasury companies are just doing exactly what CTO did. Do you trust the bank? I made another post, guys, that really hit home. Another big post. And that was, let me just give it a quick read. And that is that the rich need a store of value more than the poor. Okay. I don't know if you guys are, you know what I mean there, but when you acquire a lot of money in the bank, you worry more, because if you lose your Bank of America login, or the bank says, sorry, we don't know where your money is, it's gone. So you need a store of value more than the poor do. And the rich have found Bitcoin. Bitcoin is the ultimate bank vault ever created, right? It's a divisible, transportable, global, commodity, regulated bank vault. And I think that's what we're seeing. I think the wealthy, which includes corporations and all treasuries, have realized Bitcoin is the safest place in which to store their money instead of banks. And also banks are at risk, massive risk. Banks are facing the biggest risk they've ever faced, and that is blockchain technology. Literally, crypto replaces banks entirely. It replaces banks, credit card merchants, point of sale systems, and treasury bonds. And you saw just yesterday, Screw Bank, Russian bank, issuing Bitcoin bonds. Here we go. It's just a matter of time.
Exactly. So the bond market is toast, and there's a new bond market backed by hard assets. That's clear. You got BCG now adding another 300 million euros ATM to buy more Bitcoin. This is like a fire revolution. It's kind of crazy. There is a big bond market auction as well happening today and tomorrow. 4 auctions, the 3, 10, 30-year for big amounts. And the Fed had to buy 10 billion of their own last week because nobody was buying it. Mando, can you walk how bad that is? Walk us through when the Fed, that China's not buying treasuries anymore. Japan has their own set of problems at home. Nobody's buying these treasuries. And you got Saylor. He's issuing 14 billion of stock to create a new type of treasury tool. What's going on here? How fragile is the system?
Yeah, the bond market is a little bit fragile at the moment. What CTO said before is it's not as much of a worry as it was, let's say, when we saw Silicon Valley Bank go down a couple of years ago, but it's still there. the higher that these bond yields go, the more that bond prices go lower, right? So high yields means the actual price of the bond normally goes lower, although there is a pull to par with time. And a lot of institutions around the world have a number of these securities on their balance sheets, and they don't report them. Or they report them as unrealized losses because they just assume that the money will always come back. And the unrealized losses, they can really stack up at a time like this when rates are rising, and they seem to be persistently rising over a long time. That's not normally a worry until it's a worry, until suddenly there's a capital call or there's a need for liquidity. And that's what happened with the Silicon Valley banks. Like suddenly they needed to start selling these securities, and they were going to have to realize some of these unrealized losses. And there are certain pockets where it's a little bit high. People have pointed to a few in Japan at the moment where if there is ever going to be a capital call of some sort in Japanese insurers, for example, let's say we had another earthquake, like that would be a real worry. Like those companies could really be under stress. And there's other small things like that around the world where there's a large amount of unrealized losses on some of these institutions' balance sheets. What the Fed is doing is slightly separate. They kind of have a backdoor QE process at the moment. Now the US has to issue, I think it's like something like 10 trillion of debt this year, over the next year. Like, yeah, something crazy, right? Like, so there's bond auctions every day. Like, there's bond auctions every second. There's so much debt that has to come, and the Fed does have essentially some stability tools at the moment, where it's like buying back some of the debt. We are hitting the highest yield since the Great Financial Crisis in the US in some of the long end. So that kind of tells you where we're at. So bond prices are going down. There's a worry that these people with high unrealized losses maybe aren't going to continue to be the buyers of these sort of things, which is what Marty said. Like, there's this movement away from debt to hard assets, and potentially we'll see QE sneak in there by another name. They won't call it QE, but maybe some sort of like treasury stability process or something like that. And we could see that around the world, if I'm honest.
Yeah. Well said, Mando. And so far we'll go to the chart now in a second, everybody. But so far we've discovered Bitcoin is the final store of value, like the big boss or the final boss, whatever they call that. And it's the first step in a new investment regime. But sometimes I say that risk happens fast. So there could be a possibility that trust in legacy assets, legacy treasuries, bonds fades entirely very quickly. And then we get an absolute collapse of everything, because in order to sell these things, they got to jack the rates really high to make them attractive, which destroys economies. And we're seeing signs of that all around the world, which is absolutely terrifying. So let's move on from this. We'll get back to some more hard asset talk in a second. But CTO, tell us about the chart. What's going on in the chart world today?
Yeah, thank you. So I don't know. I have a feeling that this is what we're seeing in the chart. It feels like we're having another go at the breakout. Exactly today, some hours before DCA, the Monday DCA pump is back. So as a quick recap, we had this breakout attempt that was a legit breakout. It really was, cleared the all-time highs, and then it dropped back below the breakout level again. And talked about it. Is it a fake or is it not? Is it like a second or will we just have a second try? Now it feels like if we close here today, I think that we're having the second breakout attempt, and that could be it. I feel positive here. We are strong uptrend. We try again on the breakout level exactly today. So I feel positive here. I think this looks great. It felt strong even before this. It cleared the level. You see, it consolidated just below the level, and then boom, today it punched up again.
And there's some stuff happening, and there's some stuff happening behind the scenes too. I looked at the OTC desks, and they dropped half their bag in 3.5 weeks, which is a startling drop. Went from like 238,000 down to about 118,000 Bitcoin.
That's crazy.
That's
the figure that shocked me the most.
Yeah, but that tells me it's not Saylor grabbing all of this stuff. There's somebody else stacking it. And I think, and I've had this theory for a while, and we've shared it here live on the show, that people know SBRs are coming, and somebody is secretly stacking Bitcoin to front run the SBR. And we all seen the DJT firm trying to raise what now 12 billion or something. They upped the ante by $10 billion to stack more. Something big appears to be coming. Everywhere I look, I see signs. And I know sometimes that can sound very hyper bullish, but I'm looking at the data, and the data screams extreme bullishness. Mando, what do you think?
Yeah, I mean that shocked me because they haven't really moved those OTC, like you said, that you've been tracking them. The OTC supply is kind of kept stable, and suddenly that's moved. The only near-term thing I've seen, at least something that we could see this month or early next month, is this staking thing for the ETF. So like we could see like, and that would be seen as a progressive move. So I think it was at the end of last month, they basically said that staking doesn't create securities. There was a ruling there in the US, which kind of paves the way now for like crypto staking ETFs, which could reverberate around the industry in terms of the pitch for some of these other ones, Solana, ETH, and a few other, obviously like staking L1s could really then pitch a pretty good ETF product here. So that's the only thing I've seen this month. Other than that, it's just been this treasury play and bond yields rising. I don't know what that smoking gun is going to be this month, but maybe we'll find out. Maybe we'll hear about something else. Maybe someone's been stacking silently, and then they'll reveal who they are.
Yeah, and like we discussed earlier, 5.5% of the Bitcoin supply, which is pretty substantial, has been taken up by 100 companies. There are millions of companies around the world. We're still very early. And then we have this situation. We've got liquidity. It's still up there. The yellow line is liquidity. Blue is Bitcoin price. It's still creeping up. That's going to go higher. And then speaking of hard assets, Bitcoin accelerating versus gold. We also spoke about this chart too. And Marty, you brought this up as well. Your gold Bitcoin, it bounced clean off that 200-day moving average, which is kind of telling.
Yeah, I mean, James, this is also being fueled by some major. Obviously, we saw one of the senators, I believe, I can't remember which one, introduced a bill to audit the gold reserves. I mean, that's now the third attempt to do that. It's been pushed down. So clearly, they don't want that to happen. Why don't they want that to happen? What are the consequences if Fort Knox doesn't hold 8,000 tons of gold? What is the consequence to the paper gold market? The oversubscription of 300 to 1, Peter Schiff. I mean, Peter Schiff or whatever. Let's break that down. I mean, at the end of the day, the gold market is oversubscribed. It's as if you had a 300 to 1 paper Bitcoin market, which people were just buying as if it was Bitcoin. And the manipulation and the market making around that with regards to them just being derivatives is just profound. So gold is in a certain category of risk right now for the first time. And I think that Bitcoin, because of its entire utility, its nature, its fixed supply, the fact that it's transparent, all of the benefits that we've spoken about since the beginning of time have now started to drive home to the new people in gold. And I think we're seeing a move from gold to Bitcoin. And that's a whole new accelerant to this bullishness in Bitcoin and the supply shock, obviously.
Exactly. Yeah. Mando, imagine a situation where the bond market fails, the traditional bond market, and they can't issue debt, and a world where they discover there isn't 8,000 tons of gold in Fort Knox, or maybe other central banks. Just imagine what would happen. Think of Silicon Valley Bank that weekend when the bank failed, and all the Silicon Valley VCs literally had 8 digits, 9 digits. We're talking 10 million, $100 million in cash, that they were calling the crypto bros, hey, how can I take this cash and pivot it to Bitcoin right away? It doesn't matter what the charge to do it. That was the panic that set in. Mando, do you see a world where that could happen again? Imagine that perfect storm for a second.
I don't think the bond market's gonna fail, but I do think what you could see is like it's been a joke. The bond market has been a joke since 2008, like just straight up a joke. Central banks have just been printing money to buy bonds, and the supply demand dynamics has just completely broken down. And anyone who spent time in the credit market knows that it's just or yield market or rates market, sorry, you will find that everyone just says the same thing. Like it's just dependent on when the central banks print. So it's kind of been an ongoing joke. I don't think that fails. I think it just becomes more of a joke in that I think that the central bank will just continue to print money, and they won't allow, like Bessent said last week, the US bond market will never fail. I don't think it'll ever fail. It will become a joke far sooner than it ever fails. And the joke will be that they just print money. Everyone has to just print endless amounts of money to pay off the current debt. So, and inflation then becomes a way to kind of almost reduce the debt balance. So the way that you're describing that it will fail, I don't know if they'll never allow the too big to fail banks to go down. They'll never allow some of these governments to go down. They'll just print money to get out of it.
Yeah, or they just roll what they do. The playbook for years has been to roll them into JP Morgan. So like grab the assets, just like we spoke earlier with the Bitcoin treasuries. If it's at a discount, grab the assets, write off the debt, done.
but this sort of world where like the world collapses, I don't think that's what we'll see. What we'll just see is the gradual erosion of the value of the dollar as more and more money is printed to deal with unsustainable debt dynamics. And that will be a multi-decade trade. It won't be just one day where everything just like suddenly breaks. It'll just be like, right, okay, my dollar is worth less and less each day, and you only realize it after 10 years.
Yeah.
Do you
Okay.
think it will accelerate, like the inflation?
There are times when it accelerates, like COVID, and there are times like or 2008 or like the Eurozone crisis, and the calls for money printing will be so shrill at those times that everyone will just be like, okay, it's fine. And we won't do that again next time. And then something else will happen next time,
I mean,
so
I watched Amanda, did you watch Peter Dong's latest, I don't think it's the latest, but previous, he introduced the concept to me that perhaps Bretton Woods and fiat was never supposed to be paid off, the debt. Perhaps it was always designed as debt. Dollars is debt. Money is debt. And the whole intention is to roll it over forever. That was the system. And they never had a plan for an ending to that. And they do not have a plan. And it's up to us to create the plan. And perhaps we've created the plan. And so this whole notion of will we ever pay off the debt? I think that's a non-starter. I don't think we're supposed to pay off the debt. I think the debt is supposed to be refinanced at a different rate and backed by different collateral. Exactly.
Yeah.
No, the only
joke of it all. Like everyone knows. Everyone knows that in who even trades these markets, that like every single country pretty much has got a debt to GDP, or lots of the major countries now have a debt to GDP of above 100%. Like even if they spend every single ounce of just their GDP, not even their budget, they could pay off the debt. Like every single person spent every single dollar that they made in a year, they would not be able to pay off the debt. Like the debt is never meant to be repaid.
There's only three ways.
Go ahead.
So there's only three ways out of the debt problem. One, debase it to hell, which is what they've been doing for 100 years. Number two, create some type of holding of a fast-growing hard asset like Bitcoin, and then in 30 or 40 years, use part of that to pay it off. And number three, grow the hell out of GDP with robots and automation. That's it. A, B, C, or a combination of all three. And the people now, for the first time ever in the White House, get this, which is kind of exciting. But let's get on with the agenda, if we may. This is another little story. Commodities. There was some news, Marty, you picked up on. Sorry, I need to hide this comment. Of where we are, like XRP, ADA, Sol. Like if XRP is not considered a security, I don't know what is in crypto. So walk us through what you mean by this, Marty.
Okay, I'm a nerd. I literally have an RSS feed of every single filing on the SEC, and I go through it every day. And inside on Friday, the Hashdex and the Grayscale Fund updated their fund portfolio prospectuses to include the following text. One said as of June 2nd, and one said as of June 5th. And I happen to know on June 2nd and 5th, the SEC did not issue any news. But as of June 2nd and 5th, Solana, XRP, Cardano, and XLM, in the case of the Hashdex index, were added as components, weighted components to those two funds, which means they've been approved, okay, as commodities. These are commodity-based funds and indexes. So as we saw with them updating their commodity-based shares rules for ETFs, which they've slowly been doing over the last month since Hester Pierce got more control over the SEC, it looks like they've approved these assets. And the assumption is, and I will qualify that on Wednesday with Matt Hogan, who's on my space from Bitwise, that they have been approved, which means we're going to see a slew of crypto ETFs get approved over the next weeks or months.
Could that trigger our alt season? To the panel here, could that trigger our alt season, which everybody's waiting for?
That's what I think the pitch is for this month. If you're in alts right now, you are hoping to see a bunch of different ETFs approved. Particularly, I believe there's one coming up for, is it Rex, who just fired one for staking for Solana and ETH? We could get that approved this month, and then I think that really okay, well, we could have a full.
Yeah, and Mando, the play that you have on ETH you mentioned last week, was that because you secretly knew something was coming around staking for ETH? There was rumors of it for a long time, but now it seems to be coming to fruition.
I didn't know anything was coming, but I think that's always been a narrative, right? That they would somehow get staking because BlackRock's been pitching for it the whole time, and if BlackRock wants it, they'll get it. So
I mean, I think in kind as well. In kind, let's put staking and in kind, because I think in kind had even more dramatic an effect on the OTC markets and for the market in general, the reduction in manipulation. So I believe in kind and staking will be approved in the next batch of ETFs. It may be waiting on the Genius Act to pass, although that it does pertain mostly to stable coins. So maybe the market bull structure, which is the next one in line to get passed after the Genius Act. But I think once those two acts are approved, it's going to be gung-ho. We're going to see 25 to 50 crypto ETFs.
And I haven't been able to clarify this, but this could be huge. CTO, in-kind transfer. Imagine you've got a bag of Bitcoin. Your cost basis is $10, but you no longer want to cold store it yourself. You want to transfer it to an exchange as an in-kind, and you get your ETF shares for it. I haven't been able to verify if that's a tax event or not. Many people say it's not. Have you dug into that? And what do you believe?
I don't know. It's perhaps different on different jurisdictions. Perhaps the tax authorities don't know either in different places. I prefer not giving tax advice.
We need you for that. Marty, what do you think? It's a non-taxable event if it's in. If you move, it's like moving a bar of gold from Vault A to Vault B, and if you want to pull it out to Vault C, you pull it out the same way. You're not selling it. You're not incurring tax. Or am I too logical here?
I think the big change coming from the Genius and market structure bill is that crypto in general, the main blue chip cryptos will definitely be reclassified from property to currency and legal tender. And when that happens, then all taxation changes regarding crypto. So, and plus Donald Trump's talking, his big bill removes most of these taxes. So depending on jurisdiction, 100%, I think these are non-issues going forward. I think in kind, the beauty of in kind, obviously there may be tax consequences, but I think then the fact that we will then be able to transparently see the movement of crypto out of these ETFs on chain will, massively reduce the FUD around, rehypothecation, the ability to manipulate the asset through paper, Bitcoin, and all of that pushed aside entirely. I think Larry Fink is a big believer in kind. He's mentioned it lately in his speeches. And I think overall, it will be a more principle first, back to first principles product, which will attract more business for the ETF from the 40-year-olds and 50-year-olds in our generation who have always said in cash was a scam, as far as I'm concerned, because it involves, an intermediary in crypto, which is the whole point of crypto, is to remove intermediaries. So
Yeah.
that's my take on it. I think it's a massive event.
Okay, crazy times. And people still, by the way, we're going to talk about suppression for the 100th time, but a new type of suppression. There seems to be, I put the summary together yesterday, why there is suppression of assets, crypto. Some people argue there's also suppression of ETH happening right now, and maybe Hyperliquid, because that's going to launch on Binance. But obviously, the motivation for suppression for assets is to liquidate perp traders. That's a lucrative goal, and they do that very well. To fill a bag, maybe ahead of an ETF, which ties into what Mando thinks is possible. Keep the price low, also to fill a bag or to make sure the launch is successful. Another theory, or a far-flung theory is maintaining Binance market dominance to be a bigger asset. Everybody keeps asking why. Why is the price so low? Why is Sol trading at 25% of the market cap of ETH when it does 10,000% more across so many different areas? It's just bizarre. Marty, tell us about Binance and Hype and what that means to you. They will own it, manipulate it more.
I think the core issue has been, in 1939 they banned wash trading from the stock market. Wash trading, for those that don't know, is quite a simple process. It's the root of all manipulation. You can do it yourself, and you probably do it. It basically means if I have $100 million, I can buy $100 million of Bitcoin. I'll make big green candles. Other people will join in because it's a greater fool's theory. And then I will sell $100 million of Bitcoin, bringing the price back down, and repeat. I'm a net zero. I'm not making or losing money. But if I'm a perp seller, I'm liquidating traders and making a huge profit by wash trading. So that was banned by the stock market, and any regulated onshore exchange, including gold or silver or anything on the CFTC, includes a ban on wash trading. There is only one category of exchange that doesn't ban wash trading, and that's offshore unregulated crypto future exchanges. And so we've known forever that Binance, Bybit, OKX, MEXC, and those boys, it's a collusion, use wash trading to manipulate the price of crypto because they can. And by law, it's not illegal where they are. Even Bankman-Fried on the stand admitted to wash trading in the Bahamas. That's why they go to the Bahamas. Okay, it's not for the weather. It's because they can wash trade. Okay, just go and Google wash trading and understand the history of it and how it works. Now, the most critical of all things last week to me was the Circle IPO. Because if you read the S1 registration of the Circle IPO, you will see that now Circle is regulated under surveillance, and all of the 21 blockchains that Circle issues the digital dollar on fall under the CFTC's authority, which means that ETH, Solana, SUI, which are the primary ones, and their network token are now under surveillance. So I think we're seeing through regulation the acceptance of wash trading in crypto, and through the Circle IPO and its rush. I mean, guys, Circle announced the IPO, and within 3 days it went live.
Yeah, it's funny. This is an interesting one. What I realized is they left so much money on the table, which means the investment bankers, TradFi or TardFi, whatever you want to call them, they had no idea how to value a stablecoin. And then we have this news.
We're seeing a move to take on this collusion of offshore exchange, which has made hand over fist profits for so long, and given our wonderful asset class volatility clause. People don't like crypto because it's volatile. That volatility is artificial. Very few retail people are looking to sell crypto, especially in a quantitative tightening environment. So the question of why is it going down? Why is it suppressed? Your answer is wash trading, people. And it will end. You just need to be patient. Now, people like Larry Fink don't mind that as long as it doesn't get out of hand, because it gets them, they can accumulate more, right? They're shaking it out. It goes from retail paper hands and weak hands into strong-handed institutions putting in their treasury. So it's a win-win for institutions in the short term, But at some point, based on distribution models, I'm a big Wyckoff believer, they will continue that game until you least expect it, and they will mark it up and put it out of the reach of the average man, out of the reach of any other treasury company, out of the reach of Amazon, out of the reach of Microsoft. And that, I believe, is the ultra plan. And what also happens, a side consequence of that, is a reduced bear markets. So bear markets, the spread between the high and the low will shrink. And you'll see that super cycle chart, a logarithmic chart that I've showed several times, where you'll see smaller bear markets over time until Bitcoin becomes extremely stable. So it's all a moving machine, of which the Circle IPO, I believe, is the catalyst.
Absolutely, TradFi is coming, and stable. Every single major bank in the United States is having a hard eye on stable coins, because they know if they don't embrace, they will die. It's that simple. CTO, what are you seeing here on this chart? Sol BTC, and then we'll look at Sol ETH afterwards, because Mando and I have a little wager on that one. Let's go. CTO.
Absolutely. So yeah, there's no denying that there's been a lot of weakness in the Sol chart lately. No one has missed it. We actually got the bottom pattern here, but even that failed. So now it's back at the support level that's been holding for some time. So let's see if that one holds. But yeah, I really want to see some strength here, which we haven't seen for some time. The ETH BTC actually looks different. We talked about it for some time. This was a bottom pattern here. And now a trend has turned up, and it's kind of holding this pump up from the bottom. So this looks stronger at this point. I'm also not sure what is behind the weakness in Solana. Is it manipulation, or I saw, James, you flashed the Plasma IPO or ICO. I think it could be like something like that people move interest to new opportunities. Before, I felt that Solana was a little bit challenged by Sui, but no, that also not so strong now. Of course, it could be some move back to Ethereum, but it's a little bit hard to understand. What do you guys think about the plasma theory? Could it be? I'm not sure. I tried to read up on it. They have written on their X that they have deposited $500 million deposit cap, but they also wrote that they will be sold at 500 million fully diluted valuation, but while selling 10% of tokens. I don't know which one of those is correct. I can show it here instead. Let me show this tab. Do you know which of these two statements is correct?
They're raising 10% of that, so they're raising 50 million.
They're raising 50 million, but here they've written. Yeah, that's what I thought. That's what I thought too. But then I saw this 1 hour ago. We have reached our deposit cap of 500 million.
Yeah, because this is a stable coin L1 essentially. This is what Plasma. So what they're doing is if you have deposited out of that 500 million, you are going to get a subscription to the ICO essentially. So you get the chance to be part of the 50 million. So everyone wanted to be part of the 500 million, so to be part of the 50 million. I mean, the ICO market going back is an interesting one. This is there's a well-known crypto trader called Kobe who's behind the platform that has built this ICO kind of boom, let's say, or which people are talking about. This is the first one to kind of come to market. It's massively oversubscribed. I think back in 2017, that was far more of an ETH phenomenon, but I don't know if that would be this time. Like, I think it could be on any chain, like the ICO term. I think it's just
Man, did you believe because there's more of a friendly, say, US crypto government, it's opened the door to ICOs one more time?
Oh, yeah. So in terms of the hot narratives in crypto at the moment, you got Bitcoin treasuries, you got stable coins, and now you've got crypto companies IPOing. So the idea of what we saw Gemini immediately file for an IPO as soon as Circle did. And now we have this concept of ICOs coming back, like a regulated way to do an ICO. Like I said, so Kobe's built this like platform of a way to do it, which is supposedly regulatory compliance. So we're going to see a ton of companies come and try and do this now. And And
Yeah.
I wasn't around in the ICO boom, so I don't really know, but it feels as though feels like we're seeing some frothy stuff happening.
Yeah, what I don't get is the Plasma thing is tether backed. So it's like they're layering a stable coin on top of a stable coin. Does that seem redundant to you, or Marty? What do you think? Is that redundant?
I mean, you haven't spoken to me about Solana. I mean, I can give you my take on Solana. First of all, Solana has so much usage compared to other chains. So you have to look. I mean, I'm putting on my Mert. I'm doing my best impression of Mert. So what that means is people are buying and selling Solana 1,000 times more than another asset that just sits with no use, like a Cardano, right? And when people market sell, the price goes down. So it's the whole problem with crypto from the beginning is if you want Bitcoin to be used as a currency, then you have to allow people to sell it. So Solana has more buying and selling than any other crypto right now. And so the price, will be volatile. That's number one. It just means it's adopted. Okay, if you look at an asset like anything else, Cardano, XLM, they're really being used as stores of value. And I spoke to Robertson at Wormhole about this. And the average transaction of somebody holding Ethereum is once a year. The average transaction of somebody holding XLM is once every 2 years. These are stores of value that are not stores of value. They're being used as stores of value using speculation. So people buy them with the expectation that one day they'll be used by someone or something. But that's not the case. So they just hold them. Solana is very different. Solana is used to pay people, pay salaries, earn money, buy meme coins, sell meme coins, buy real world assets, sell me real world assets. So there's a lot of buying and selling. Therefore, it's just being used. Secondly, it has the biggest upgrade roadmap probably in history. We have the Seeker phone. We have the Seeker phone coming out, which is arguably the intended purpose of Solana in the first place, is to create, a competing duopoly mobile network. I mean, people must understand Solana comes from Solana Beach, which is a city in California, which is headquarters of Qualcomm. That's where Anatoly comes from. So Solana is by essence a mobile product. It is a network to support a mobile economy with a new phone at high speed, almost instant finality. And they've rolled out their roadmap very carefully, right?
With a wallet, with a very secure wallet.
With an extremely secure wallet.
On the silicon, yeah.
Exactly. Very forward thinking. So they built the Solana Foundation built the first validator. Obviously, when they upgraded the validator, all validators had a restart, and that's where Solana got called, going down, which just means all nodes had a restart. And they addressed everything. They did. They moved from Solana Foundation, the core dev team of the validator, to Anza. So Anza is now the one validator of Solana, and have put out version 2.2, and have now announced Alpenglow, the first massive upgrade to Solana, removing proof of history, making it much more similar to sort of a SUI consensus, with near instant 100 to 150 millisecond finality.
Faster finality, yeah.
Exactly, by the end of the year. And so on and so on. And, the meme coin experience was really a liveness test. They did the testing that allowed them to understand that the public internet can't support more than 1,500 transactions per second. So any other blockchain, including Hyperliquid, has not hit that wall yet. No. And they will hit that wall. And what will they do about it? Well, Solana has already got a 9-month advantage in making 00, a private network, to address that problem. So they've always consistently been ahead in the technology and the vision. And that hasn't changed.
Yeah.
They're more ahead they're doing now than anyone else. Go ahead.
Exactly. And you're right. The rate of change is the most important thing to look at when you invest in technology, any technology. CTO, do you think Alpenglow makes Firedancer redundant, or is it complementary?
I think it's the next step of the evolution. I mean, if they can really pull this off and get like 100 to 150 millisecond finality, that's incredible, actually. So if this works, that's really the next generation technology. It could be used then for real-time applications. Like 150 milliseconds is very little for this kind of application. So that's astonishing. I really hope they pull it off, and it's very exciting, and I'm surprised it's kind of nothing happens with the price when something like this comes out.
Exactly. Well, people don't trust until they can verify, perhaps.
Yeah.
But let's talk. We got to wrap up real soon, ladies and gentlemen. Risk is on. Risk on is on. This is a study from not JP Morgan Stanley, I think, and they basically mapped out the feeling in the market. Early 2025, everybody's freaking out about tariffs. April 8th was the rock bottom. The only way it was up as far as I was concerned. And then the trade tensions, people saw like the boy who cried wolf. It's like, who cares? Nobody really cares anymore. And that marked the turning point. However, TradFi did not jump in. Retail did. That was the first time ever in my life where I've seen retail front-running TradFi, including into riskier stocks, etc. And they bounced back, V-shape recovery for many of them. And we had the best May in 35 years. Then now, May, the TradFi guys are saying, yes, now it's risk on time. At last, after missing the bottom. Mando, what do you see in this risk on short? And do you believe we're risk on? I mean, the stuff around crypto is extremely bullish right now. But also when you hear good, solid experts like Tom Lee from Fundstrat, he believes we're going to go up 20% this year in the S&P 500. What's your take on the overall market? Is it as bullish as people appear? And also the risk of, I think I have another one here, this one. The M2 still going up. Recession odds have fallen to 28%. Global bond market's toast. Investors are going risk on. Have you seen a macro environment like this before?
It's a contradictory environment. Like normally, if bond yields are rising this high, people would be a lot more scared than they are. But we're back to kind of all-time highs now on stocks, at least global stocks, and other pockets of risk are going higher. The only real weakness we're seeing is in like the real estate market. It feels like I am bullish on crypto. I don't know if I'm that bullish on stocks here. Stocks feel like the sort of thing where you could wake up one day and like there's something's blown up in the global financial system, and that wouldn't be the thing to own on the dip. Bitcoin would be the thing to own kind of on that dip. So I'm a little bit wary that we're kind of like, as we spoke about earlier in the show, like the bond market being toast is not good for the stock market. So if the stock market continues to go higher, just know that that's probably going to be a time in the future where that, like, there's one day where, oh my God, shit has hit the fan, so to speak.
Yeah.
So
actually, let me double tap into one of those questions, Mando. If Bitcoin is accelerating faster than gold now in a risk-on environment, what happens in a risk-off environment? Panic? Can it truly hold? Because this is the weird thing that I struggle with, because I see Bitcoin as both risk-off. It should.
Oh, we've lost him.
There we go.
We've lost him.
James.
Maybe he did say they were going to cut off his power in an hour, so maybe the power has gone.
Binance cut you off.
Yeah, maybe I'll follow on with what he was saying, because I think he was going to say it can be both. I think there's always a time to be bullish Bitcoin. You can always say there's a time to be bullish Bitcoin. I don't know necessarily whether a catastrophic event in the bond market would be short-term bullish for Bitcoin. I reckon we'd sell off a decent amount there, but I do think it'd be the best thing to own on any sort of dip. And in terms of short-term, I kind of agree with what CTO said, where I think we're going to hit all-time high this week. It feels again like we're going to touch it, and Bitcoin, I just don't really know what knocks it out of place. Like there was a very weird sell-off last week with the whole Elon versus Trump thing, which took us all the way down to 100K. But now it just feels like the market just showed its hand, right? The moment we see any sort of a dip, tons of people come in to buy Bitcoin, it feels like. So I think we're going.
Yeah, I mean, in my opinion, I think that the stock market is waiting for a rate cut, and there's now more speculation about Trump putting in a new Fed this week. We've got names already named, but in my opinion, I think that there's going to be a rate hike. I think that the Treasury market is in trouble, and I believe and those yields are going up, and I think stocks will pay the price. Now, there's obviously the other side we spoke about, which is AI and robotics will increase GDP, make stock shareholders more money by making companies more profitable with less humans, and humans are becoming, dead weight. But once again, let's end the show with the original conversation. Why is nobody talking about the erosion of the lower class, of lower class jobs, of entry-level positions? How come no one's talking about that, and what is the solution? And if you're a publicly traded company with thousands of employees, you're probably going to lay off 70% of your staff by the end of the century. What are those people going to do? How does crypto play into that? Are we heading to a UBI? Are we heading to a 1% billionaire class, and everybody else just entertains them and sits on metaverse goggles and is a king in a metaverse world sitting in a Tesla tiny home? Is that the future? And how do we front run that? What's the trade? And that's where I live. Go ahead, CTO.
Yeah, I feel like this, like how to solve this on a society level, I don't know. But how to solve it for each person individually that's here listening is very clear. I think the best spent time right now is to try to learn investing. I feel that is the opportunity, because just like you said, Marty, there are companies here that will massively benefit, and there are crypto projects, that's Bitcoin, that will massively benefit from this change. Then there's a lot of people who will not benefit at all. They will, it will become a huge problem for them. So instead of clinging to something that doesn't have a future, the opportunity here really is to learn investing and try to capitalize on this change that is coming. That will solve the problem most likely for each person individually, if you do it, carefully and structurally over a long period of time. At how to solve it for the society, I actually have no idea. I think the change and the problem is bigger than many people realize. Just like you said, Marty, it's going to be a bigger change than people think. And what all these people want to do, I don't know.
Mando, what's your take on this before we go into the close? I'll just close out after this. What's your take on this? What is the trade? We know this is happening. It's inevitable. What is the timeline? What's your feeling about it? How are you positioning yourself?
I just don't get overly. I agree with the take that, like, if without checks and balances, like, things can get pretty dystopian pretty quickly. What I just tend to find is that people will just they'll just print money to deal with all these sort of problems. Do you know what I mean?
So you think UBI? So you think UBI is the future?
UBI, we could go down any of these sort of routes. So, like, I just don't think society will let itself get dystopian. They'll just print their way out of it, seemingly, in terms of the problem. So I do think that's why Bitcoin just continues to be a very, very strong asset to own here.
Right.
I think your trade about your hard assets is one that we're seeing everywhere. Like, I think it's not just that. You could own other hard assets as well. Gold is another one, but there's various other commodities which are ripping at the moment, which I think could be interesting trades. But I like this move into hard assets. I think that's been a trade which I've been on since kind of 2020, when I just realized that this was going to keep repeating itself. It wasn't going to change.
Right. So, yeah, I mean, I think let's summarize before we end. I think that the narrative over the last weeks, the real trades, I mean, my community, we're up 8,400%, was Bitcoin and Solana treasury companies. There was NACA, ASST, CEP, Known Labs, KNW, KWM, Wave, a Korean company, all in Bitcoin. Obviously, MicroStrategy accumulating more. Then there was DeFi Development Corporation, Sol Strategies, and this kids company, all doing Solana strategies. And there was tremendous gain to be had. I just want to warn traders, take profits. Okay, this is definitely a narrative. People are slapping crypto into their treasuries and, re-getting interest into dying stocks and using a sort of a clone SPAC model. So you should definitely see this as a short-term trade. I would take profits, definitely. Everybody take your profits now, put it into Bitcoin. That I think is the trade to be had. The other thing I wanted to bring up just before we round it up, Something I found randomly last week is an agreement that Trump and China signed in 2020 called the Phase One.
Yep.
And Phase One agreement was not, I grokked it, was not picked up by mainstream media. It was dusted under the covers. Trump has not mentioned it, which is a strange thing. It's a show in itself. But it is the reason for tariffs. So if you want to know why we have tariffs, what the strategy was, why it happened, go and read about Phase One agreement. There's a website for it. It is a clear violation by China on the agreement, and they blamed COVID for the reason they couldn't come to terms with it, which was a $500 billion trade deficit with the US. They had to buy $500 billion of goods and services from the US over 4 years. They didn't even come close, and they blamed COVID. Go and have a look at that. James, you back?
Yeah, I'm back. A weird thing happened. Power outage. Everything died. Internet died. Power died. And you guys survived.
Yes, we did. James, why don't you wrap us up?
Yeah, that last question, I don't know where we got cut off, but I did ask, the risk off, risk on balance, Mando, between, traditionally Bitcoin was risk on, gold is risk off. Now we see everybody going risk on. What would happen to Bitcoin in a risk off world? Would it still be risk off, or would it be risk on, or would it fall? This is what I struggle with, because I see it going both ways. I see Bitcoin going up no matter what.
Yeah,
I
just
think when you sell Bitcoin, you go into dollars, you're losing purchasing power. I see it as a Warren Buffett type dumb move. Like Warren Buffett is sitting in cash, losing. I mean, I did a chart. He's losing 0.01% per day in purchasing power over the course of a year, 15% right now, and that's only accelerating. So there we go. I think it's a dumb move. I don't think people will exit.
Sorry, Mando, CTO, final thoughts. Risk on, risk off, Bitcoin.
I think we're going to all-time highs this week. I said it before you came. I'm not eating my hat this time, but I think there's a good shot.
Awesome.
Chart looking great. I'm positive. I think Bitcoin could be fulfilling needs both for risk on speculation and risk off, because like I said earlier, I think a lot of people are worrying a little bit, increasingly so, about the bond market, about the bank's ability to not lose the money, and what's the solution then. For fun, I asked, that can maybe be a fun thing to end with. I asked ChatGPT if it's a real concern, and it agreed it's a real concern banks could lose the money in this economic environment. And then I asked, okay, so what do you suggest then? And then it suggested 3 categories of actions. More stable government bonds. It suggested Switzerland and Singapore. Number 2, gold, not issued some certificates from the bank, because if the bank goes down, that could go too. It has to be like gold bars stored not in a bank vault, but in some other custodian. Very complicated. Number 3, Bitcoin in a hardware wallet. That was ChatGPT's suggestions for a safer way to store the money than keeping it on the bank account. So now we are the safe guys.
Yeah, and I want to thank everybody. Sorry about my little 3-minute interruption. No idea what happened. I do believe there's secret stacking happening behind the scenes. I see it in the data. I see it on chain. Somebody knows something big is coming. And we could, at last, since 2017, we've been waiting for a supply crunch. It's not beyond the realm of possibility to see it in 2025 or 2026. And there's also a 20% chance that we do not go into a bear market. With that, everybody, I want to thank you all for coming. Thank you to lovely people in the audience. Thank you to moderators in chat. Don't forget to follow everybody in the links below if you're watching on my show. And everybody, follow everybody. These are legends. And I want to really thank everybody again for being here today. And a really interesting conversation. Cheers, everybody. Have a great week.
Love
Stay
you all.
bullish.
All-time high by the time next Monday. We'll see you there.
Bull. 2 bulls. Bye.
Double bull, triple bull.